Welcome to the Daily Exchange. I'm here with Cam from CanYa Coin. We're talking about XRP going up through the roof, Bitcoin almost dying, and a few other things right around the corner. See you guys soon. All right, guys, we're back. We're here with Cam. Welcome to the Daily Exchange, Cam from CanYa CTO.
Thanks for having me.
Hey, good, man.
Yeah, how you going?
Good. Welcome. It's a big day out here. Markets recovering, man. How are you feeling about the markets right now?
Feeling great about it. Yeah, seeing that green every time I wake up, like 6 times a night to check Binance.
Bitcoin's still trading about 50% dominance right now. Prices are $6,001 for Bitcoin. Ethereum 244, Ripple at 57 cents. We're going to talk a little about Ripple in a bit. EOS at $6 Square, Bitcoin Cash 488. And we're going to talk about Stellar a little bit later on as well at 27 cents. Ethereum Classic, $11.55. Kind of moving around, bubbling around. But Bitcoin over the weekend, it sort of held that 6,700 mark, which was really interesting. Sort of seeing consolidations right now. CoinDesk right now is calling analysts are looking at this 7,050 mark. If it breaks through the 7,050, we could fly. How would you feel about that, Cam?
Definitely. I was looking at the charts this morning and there's the potential for a double bottom forming at the moment. So I think that we've seen probably the worst of it. It's been a tough year, we know that, but there's probably some strong buys in the market at the moment. I think it's time for the bears to go and hibernate.
We're talking over the weekend that a lot of alts have been recovering, and obviously that brings even more fuel back to Bitcoin eventually and Ethereum. So the potential could be some cadence back from this alt rally pulling back to a Bitcoin rally as well. But the big news over the weekend was this XRP. If we're going to bring this up, Joel, XRP literally went parabolic. Literally got in its rocket pack and went to the moon. It was trading around this 26 cent mark. And the highest it hit, well, this is on Binance, was 80 cents. That's definitely double, if not triple, the price, getting very close. Has pulled back now to around that 57 mark. And there's been a lot of talk about this, and we just want to break down some of the things that are contributing to that. We've got basically, a lot of people are talking about this FOMO right now of Ripple. Because they're talking about, Ripple's got this XRP token, it's got this XCurrent, it's got XRapid, and, which one is going to be used. And we're going to talk a little bit about that in a second, but I think a lot of retail punters, a lot of people out there, they like Ripple. They get it. International money transfers. Sorry, not Ripple, XRP. I've got to be really careful, by the way, using this. Ripple and XRP, and the correlation is not exactly the same. But a lot of people sort of FOMO'd in, you could potentially say. PNC also joined, US PNC, Financial Services Group, joined one of the 10 largest banks. There's a tweet here, Joel, if you want to bring this up as well, saying that PNC will use XCurrent, but it doesn't use XRP. Now, there was a recent interview with Ashia Birla of Ripple, Senior Vice President for Product Management. And this is important. I quote, they're kind of using this XCurrent, talking about XCurrent, and XRapid uses XRP, XCurrent doesn't. And he says, I'll quote, it's a way to get their toe into the water. He added that the next step would be get them to use XRapid, which has our liquidity product, right? So you've got this initial step in using XCurrent and then potentially using XRapid. What do you think about that, Cam? Do you think people are ready to jump all the way in?
No, I think it's got to be transitional, and I don't know that everyone's ready for a pure kind of just all in. This is probably a smart move, just taking things step by step and just bringing people into the adoption space just slowly but surely in a stable way. These sort of massive price spikes is not really what we want to see. We want sustainable growth over the long term.
hear what you're saying. So the third thing we talk about is that there are speculations out there that Ripple shorts, people who do, XRP shorts, got squeezed over the weekend, and that's what sent it even through the roof. And now even John Bollinger, who created the technical term analysis of the Bollinger Bands, joked that on Twitter, if you want to bring this up, Joel, that the short squeeze has been respelled XRP. Wow.
Pretty dangerous. Pretty dangerous to be shorting something like Ripple for sure.
pretty intense. You know, I think all of those things, and then obviously that short squeeze led to more FOMO, you know, and it really drove this price through the roof. How do you feel like if you were running, you know, Ripple, you, obviously as a CTO, you know, from a technology adoption perspective, how do you feel about their approach in getting X current and then getting X rapid, and how that sort of being disconnected slightly from the XRP token? How do you feel about that?
Yeah, I think it's potentially a smart move. It's a great example of how organisations today can actually offer value without necessarily going all crypto, all decentralised. So in order to bring more people into the space and certainly institutional investment, I think we need to see a slower, a more gradual transition into the cryptocurrency space and the decentralised world.
I hear what you're saying. Stellar over the weekend, over the last week was up 43%. Actually popped EOS for 5th place at one point in time. Potentially on the news that Circle Invest is going to add XLM. Maybe that was people also sort of, you know, XLM potentially competing with Ripple. People still, you know, Ripple goes up, maybe XLM goes up, maybe a bit of extra FOMO. Anyway, a lot of speculation there. That is not financial advice, by the way. We do not do financial advice on this show.
And not giving away ETH.
No, we are not giving away ETH, nor are we giving financial advice on this show. Cam, we're going to talk about CanYa now. CanYa is the freelancer, the crypto, or the freelancer crypto. The blockchain of freelancing. Tell us about CanYa.
Yeah, sure. So I guess our number one goal is to bring that sort of freelance workspace, you know, into the crypto world and largely support, you know, the unbanked gig economy. So, I mean, that's not to mean we can't service, you know, anyone with our freelance platform, but basically, you know, we can provide a service to people that costs them so much less in terms of transaction fees. So to use the CanWork platform, which is our flagship product, is only a 1% cost. And so a provider of services can go on there. They may be unbanked or they may be banked, but they can certainly earn money in our CAN token and do their work and be paid fairly. And
let's talk about this CAN token. So the unbanked, is that the basis of it being a decentralized platform?
It is, yeah. So really the idea is that working in crypto means that, you know, you don't require you know, fiat transactions and those high transaction fees that go with it. So offering a 1% transaction cost on our platform is a big attraction for people who are doing work, providers of services to clients.
Because they can't get bank accounts, but they can get this cryptocurrency, and then people can obviously now give them freelance jobs, which is massive, right? Absolutely huge, and that's awesome. And recently as well, you guys released a hedged escrow system for the CAN coin. So if you buy a service, the volatility doesn't move. Tell us about that. Tell us more about, you know, how does that work?
Sure. Okay. So if I'm a provider of a service and, you know, I'm giving you access to my skills, and I might make an arrangement with you and say, well, okay, I'm going to build a small website for you for $1,000, and you pay me in CAN into the escrow, and that CAN is held. Now that CAN needs to be basically pegged to $1,000. That was our agreed price. So once that work is completed, which might be a month, there may be some volatility in price. Our hedged escrow will protect me as the provider of the service against losing out or having to come back to you and say, well, hey, I need more money because the value of CAN has changed. So basically what we have there is an entry into the escrow where we determine what the value of CAN is versus a US dollar by using the DAI stable coin. And determine what that actual amount of CAN represents in terms of US dollars, which was the agreed amount for us to work with. And then once the work is done, our liquidity pool through our Bancor network that we work with as well allows the provider to actually receive the correct amount in fiat terms in CAN.
Cool. So is this live? Is this working right now?
It is. It certainly is. Yeah.
Wow, great. That's fantastic. So partnering with DAI, using the Bancor system, which is really, again, very cool. Now, you've got a very interesting partnership coming up with Doc.io. Why did you partner with Doc.io?
So Doc.io basically provide a service that we think is very important in the decentralized world and moving forward just in technology in general. I don't know how many websites I've gone to fill out my user profile. I've got one on here, 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 and here, and I've got to keep them up to date as my circumstances change. Doc.io is a central place where other technology providers can access that profile once they're given permission from an application. So users that are already on Doc.io will basically have access to the CanWork platform without having to go through and maintain their user profile and their portfolio details in two places.
Wow, that's excellent. So you could take that all throughout the different apps of CanYa.
That's right.
Talking about let's go a little bit deeper into CanYa now. What blockchain are you guys currently running on?
Yeah, so the CAN token is an ERC20 token, right. So that's an Ethereum-based token.
And why did you choose the Ethereum-based network?
Well, really, it's because it's all of the work that we wanted to do with smart contracts, and Ethereum is really probably the premier platform for that when it comes to any network. There are others that provide the ability to build smart contracts, but I'd say that Ethereum is a fair way ahead of the curve.
Is there any views on changing that and changing protocols?
Not at this stage. I mean, for us at the moment, it's fairly solid, but certainly we could if we wanted to. We're not locked into it necessarily, but at this stage, we're very happy with Ethereum.
What will these new changes? We've got Constantinople coming out with Ethereum. We've got proof of stake coming out. Will that affect your token in any way?
I think that it will. I mean, those changes to Ethereum are going to have a fairly important impact on the industry as a whole. But I think that the impact will be positive, actually stabilising price in some respects. And certainly for me personally, I quite like the concept of proof of stake. I think that again, more institutional investors and retail investors want to see proof of stake so that they can earn rewards for their investment in a way that's sort of more familiar to them, compared to traditional investment vehicles like stocks, for example. It's almost like getting a dividend or having money in a bank account. Once you've staked your crypto, you can enjoy that 100% return on investment.
Now, you guys are running. Let's bring up this, Joel. Bring up the screenshot here of the CanYa app. We've got a lot of applications, so maybe we just work through this. We've got Can Send, Can Sign, Can Invoice, Can Share, Can Work, which is really that premier one, Can Track, and then you've got on the freelancer side, Can Sell, Can Station, Can Fund, Can Seek, and so there's a lot of applications right now. Obviously, you guys are really, really progressive in that sense. What's the? I guess, are you worried about there's too many focuses, too many things you're taking on?
Not really. I mean, what we've built is a platform that we're hoping to attract more and more open source developers to build their own CAN apps. And really, it's a platform or an ecosystem. I mean, I'm not a fan of using that word, but it's an environment in which developers can come in and build their own applications and generate their own revenue by utilising our tooling and a lot of our open source code, and they can have access to those. So we've set a number of applications that support our flagship, CanWork, and so we're hoping to see more and more developers adopt our platform and develop their own CAN apps.
Gotcha. And with these different apps, what's been the response so far? Like, what's the most popular ones that are used?
Definitely CanWork at the moment, because that steps outside of the crypto space. CanWork is something for just the gig economy, right? It's not crypto only. Some of the other apps, like for example CanStation to calculate gas prices on the Ethereum network, that's crypto specific. So we're expecting a wider adoption with CanWork itself, because that's not just the crypto world.
And how many jobs are happening right now, or would it call you jobs or?
Yeah, jobs are what we call them.
Yeah.
At the moment, we've only got, you know, in the low numbers moving through at the moment because we've only just released. But we've got a very close connection with our community, and the users of the platform right now are giving us some great feedback in terms of what features that they want to see moving forward.
So I've just brought up, Joel, if you want to bring up my screen as well, I've brought up the application, which I think is great. You can see this is CanWork. I've signed up. You know, if I want to find you, Cam, we'll see if we can send you, and you can click Let's Chat, right? So this, all right, this is to post a job. Sorry. So if I was to click on you, I can chat with you. I can post a request for a job.
That's right.
So I click Let's Chat. I say, hi Cam, do you do development? Let's see what happens. And so this is really a place where you can cool. So Cam's replied to me, I sure do. This is a place where you can talk to the freelancers, you can prepare your brief or your job, and then you go on to post a request for a job with this person, right? Then you agree on a price. You stake those coins.
Yep, you place those into the escrow.
And they fix in with the DAI hedging system. The work gets done, then the coins are released to the freelancer, and they're only charged 1%.
That's right.
Because Odesk charges between 5 to 20%, I think.
That's right. Yeah, our research tells us that it's anywhere between 15 and 30%.
15 to 30.
Yeah, wow. It's a lot of money. And you know, at first you might think, well, that really is going to obviously help me as a service provider. If I'm going to charge you $100 for a piece of work, I get 99 out of it instead of 70. But that also means I can be more competitive with my prices to you because I don't have to factor that in.
And I guess how does that whole system play into the tokenomics? Like how is this going to, using CanWork, how is this going to increase the price of the token?
So basically, the more jobs that are in flight, the more money that's going to be held in escrow whilst they're in flight. So that basically reduces the amount of supply of CAN that are on the market, and that is basically going to increase the price of CAN.
Gotcha.
And more people are going to want to own CAN because it's an awesome token.
And you know, I guess in terms of talking about price, the coin itself, it listed, I think it was, the ICO was at 76 cents. I think we're down to 7 cents, like most ICOs that's happened. What's your view on terms of utility tokens? And a lot of people are saying, you know, this is not going to work out. This is, you know, I don't know what the value of the token is and things like that. A lot of people are worried about that right now. What are your plans right now? What's CanYa's plans, I guess, in terms of the future of the token and bringing value back to the token holders? So
just basically using that token and via things like our hedged escrow, for example, to attract people to the platform and the ecosystem as well, and build an environment where that token actually brings a lot of value via those applications that it services. So it's an entry into our platform, and so, you know, I can see the price, you know, just continuing to move up. The more adoption we have of our services, the more CAN will be worthwhile in terms of holding, and I can see that would just increase the price moving forward.
Very cool. In terms of when the ICO was done, you had the co-founder, your JP. He talked openly about moving from Google Sheets to an in-house built tool, which sort of replaces the very specific accounting for crypto and compliance. Can you tell us about this secret software that you have inside?
I don't think it's a secret. It's called Token Books, but certainly one of the challenges as an individual investor in crypto, and certainly any business that operates in the crypto space, either partially or fully, is managing the accounting. And so what we're going to start to see is, as we increase adoption, we're going to start seeing more and more requirement for accounting software that is crypto aware.
Right. So it's really taking account of all the different little intricacies when it comes to tokens and accounting for those things and things like that. That's really interesting. I'd love to see something like that in the future. In terms of other, you know, blockchains or coins, are there any out there that you find exciting yourself?
Yeah, I've got a lot actually. Well, I mean, I find it hard to pick a winner when it comes to, out of all of the crypto that are out there. I tend to think of the different flavors. So as far as stablecoin is concerned, I like TrueUSD because it's on the Ethereum network. As far as a privacy network is concerned, Monero is my pick. Probably from an adoption point of view, I'd have to say Monaco. I think what those guys are doing and bringing on board a Visa card for on-the-fly conversion for fiat to make payments is like a great thing. And at the moment, until we see proof of stake available on Ethereum, I'm a big fan of Neo as well.
Okay, cool. And do you have any trends right now you're sort of seeing in cryptocurrency?
The trend is that, and this has been something that's been spoken about quite widely on the internet, is that there's a lot of emotional buying and selling going on with the market. We see news, and the news can not always be verified, or it could be FUD, and people start panic and sell or panic and buy. And I think that's what we've seen, more recently with some of these big pumps and dumps that have been going on. So I'm seeing though a very slight trend away from that. I think people are starting to get used to the idea of this news coming out and not necessarily being truthful. And I think we're going to start to see now, because certainly the place is set for a wider term adoption of crypto from institutional investment. And I think we're going to start to see some of that come in. Once that happens, we'll have a much more stable market environment, because there'll be a lot bigger money in there that doesn't do that sort of retail investor panic sell.
Totally. Do you have a prediction for Bitcoin at the end of the year? December 31st, Cam, what's your prediction for the price of Bitcoin?
So there we are at New Year's Eve, having beers, looking at our phones to see the Bitcoin price. I'm going to say about 11,000.
11,000. There it is.
Yeah.
I like that. All right. Thanks so much as well, Cam. Let's move on. We're talking about, now this is a topic I think where I would really appreciate your input from a technical perspective. Bitcoin over the weekend potentially almost died in near fatal news that there was a flaw with a DDoS vulnerability identified on Monday. People worked internally ASAP to fix it, and they were told, miners were told to roll it out as quick as possible. And tensions have kind of settled down a bit, right? This was the first problem. Sorry, this was I believe this was last week, if I'm not mistaken. And we've got this major vulnerability with DDoS, right? And potentially other blockchains might have the same thing. Ethereum saw some issues with DDoS as well. Can you explain, I guess, Cam, is this a problem for other coins?
It could potentially be. It's just something that you just always have to be vigilant about. DDoS is something that can affect any technology, not just cryptocurrencies. We've seen websites that have been hit by DDoS attacks, and basically DDoS, distributed denial of service, is just basically overwhelming a network with requests and really causing it to bog down. Now, what I think is great about this particular piece of news is the response time and the way that it's been handled. So this is not a new scenario. We've seen this whenever there's a vulnerability found in OpenSSL or the Linux kernel, which are technologies that underpin everything that we use today. Those open source communities, they respond very quickly, and they're usually very open about what they're doing. And so because of the openness and the open source nature, everyone's able to see what the issue is, and everyone's able to submit a patch. And so what I'm pleased to see here is that there's been such a fast response on this.
So the second problem that was identified at this juncture was that there was potentially a vulnerability of inflation for Bitcoin. In other words, more Bitcoins could be printed, which is a major issue, right? That would undermine the entire premise of Bitcoin being a store of value, all those kind of things. I'll just read, I guess, some of this. Shortly after, this was the announcement that was put out. Shortly after fixing the vulnerability, the Bitcoin core developers discovered that the bug in the code causing the DDoS problem was even more serious than previously thought, because it also created a second problem. The same vulnerability could be exploited to inflate the Bitcoin supply. Now that's a major flaw. Create new Bitcoins beyond the 21 million that Satoshi set. This meant that the code fix of the DDoS bug would also take care of the supply inflation bug, but probably in order not to cause panic and not to encourage quick upgrades, the developers decided to only disclose the DDoS bug. Do you think, Cam, is the Bitcoin core team hiding anything else, do you think?
I don't think so, and if they are, they would be doing it for the right reasons. We've seen this as well in vulnerabilities of, as I mentioned earlier, wider spread technologies, the Linux kernel. One of the challenges, and it's a very delicate balance, is when an exploit is discovered, you obviously want the open source community and the developer community to react to that. But you don't want the malicious people out there to be aware of it and basically say, well, here on a platter, this is exactly what you need to do to, print your own Bitcoins. So I think it's prudent for them to have basically, kept that to themselves. And, they've come out afterwards and they've been 100% open about it now that the gap has been closed. And I think that that's the right approach.
We've got a question actually on the show. Joel, if you want to bring up the question. Question from Aaron P. The whole CanYa ecosystem won't have a central entity. The DAO will control quality of freelancers. I guess that makes it lightweight in terms of fees. So will CanYa have won't have a central entity, so it'll have a DAO in the center of it. How does that work? Talk us through that.
Yeah, definitely. So moving forward, one of the issues that causes a scale problem when it comes to a freelance economy is things like dispute resolution and support. So you could imagine that two people are doing work on a platform like this, and perhaps they come to a point where there's a dispute regarding the work that was being done or the payment that's been made. And so that could be in any language, and so you need to have people that are going to be there to support and actually resolve that dispute for them. Now, centralised organisations like our competitors will just literally have a team of people that can speak all of these languages and sit there and make the decisions on these disputes. The DAO, Decentralised Autonomous Organisation, is a way of basically distributing that workload and offering a bounty so that anyone out there can go, hey, I'll take on this dispute resolution task and I'll get paid for that work. So that means that as we scale up the number of jobs that are in flight, we can easily scale the number of people that are doing dispute resolution, because the decentralised aspect of it means that anybody could do that work. So, and that kind of is kind of a self-perpetuating aspect of our platform, is that now we're introducing even more people into the freelance economy. So they may be providers of services within CanWork, or they may be providing their service as an arbiter for dispute resolution.
Well, that's really good, I guess, because this community and the one that you're fostering around Ken seems to be very strong. Do you think that coins that have these communities also sometimes can be quite vicious in terms of you're building this technology, they want it done immediately, like everyone wants everything built tomorrow.
Yep.
How do you deal with that pressure of the community and what they demand, I guess?
I guess it's a case of just making sure that we're open about the work that we do. So we communicate. Our community managers, Dion and Johan, are very active in the community. They're doing blog posts all the time. They're active on our Telegram channels. They're talking to our users of our system and also our token holders as well, our investors, and they're understanding from them what their needs are. And I think really when it comes down to it, everybody wants the world tomorrow, as you say. But as long as you're being open about what it is that you're doing and you're demonstrating that progress, then people are basically happy. It's when you start kind of trying to hide those things, that's when people get upset, and fair enough too.
Totally. All right, and finally in today, the iOS 12 has released a new Bitcoin glyph. What's a glyph, Cam? What is a glyph exactly? Can you give us
You can think of it as basically an icon.
An icon.
Yeah.
So it's part of the font.
Yeah, it's part of the font set, and so I guess now, who knows? Maybe this is a move toward Apple Pay supporting Bitcoin.
Do you think Apple Pay will allow you to send Bitcoin?
I think eventually, yeah, we'll start to see that type of adoption.
Wow.
There's too much money in the market cap to ignore it.
Wow, that's amazing. All right, guys, you can follow obviously Cam. We've got some details for that, and CanYa, obviously you can join their community as well. And thank you so much, Cam, for coming on and joining us on the Daily Exchange. Guys, do subscribe. Do join us every day. We send this down the pipe. Do ask questions whenever you want and or feel. Press the little notification bell, and we'll see you guys tomorrow on the Daily Exchange. Yeah!